Join Mirror Accounting Services as we take a look at how President Trump's big beautiful bill might affect you. Whether you're an employee or run your own business, there's likely to be something in the bill that impacts you. So let's dive in. On July 4th, 2025, President Trump signed into law the One Big Beautiful Bill, a sweeping tax reform package aimed at individuals, families, retirees, gig workers, and business owners across the country. At Mirror Accounting Services, we've gone through the bill in detail so you don't have to. Here's what you need to know, and what steps to take now to make the most of it. Part 1. For individuals. Lower tax rates locked in. First, the individual tax rates from the 2017 Tax Cuts and Jobs Act are now permanent. That means the top tax rate stays at 37%, instead of rising back to 39.6% as it was scheduled to in 2026. The standard deduction remains nearly doubled, $15,000 for single filers, $30,000 for joint filers in 2025, and indexed going forward. New tip and overtime deductions. There's also a big win for workers in the service, healthcare, and logistics industries. You can now deduct up to $25,000 of tips and up to $25,000 of overtime pay each year through 2028. These deductions phase out for individuals earning over $200,000 and joint filers earning over $300,000. Driving a U.S. assembled car. And if you buy a U.S. assembled vehicle between 2025 and 2028, you can deduct up to $10,000 a year in auto loan interest on that purchase. That's a big incentive to buy Americans. Part 2. For families. Child tax credit increased. Families will see relief too. The child tax credit increases from $2,000 to $2,200 per child, and it's now indexed for inflation. That means the credit grows with rising living costs. Something we've never had before, SALT cap increased. Also, for those in high-tax states like California, New York, or Maryland, the cap on state and local tax deductions, or SALT, has been raised from $10,000 to $40,000 through 2030. But note, this applies only to filers with adjusted gross income under $500,000, and it will revert in 5 years if Congress doesn't act again. Part 3. For retirees. Retirees on Social Security have new breathing room. The law introduces a $6,000 per senior deduction, or $12,000 per couple, that directly offsets taxable income, helping nearly 9 in 10 retirees avoid federal tax on their benefits. Part 4. For gig workers and side hustlers. If you earn tips, overtime, or side hustle income, the Big Beautiful Bill brings some changes. Whether you're in hospitality, healthcare, trucking, or on an app-based platform, you now have access to deductions that can reduce your taxable income. You can now deduct up to $25,000 of overtime income, up to $25,000 of tips, if not already excluded. Phase-outs begin at $200K for individuals, $300K for couples. Just remember, keep detailed records, track cash tips and overtime separately, and make sure you're using bookkeeping software or an app to keep clean records. Part 5. For small business owners. Small business owners, this one's big. The 20% qualified business income deduction, or Section 109A, is now permanent. That means eligible sole proprietors, S-Corp, and partnerships can keep deducting up to 20% of their net business income every year. Equipment and vehicles, 100% bonus depreciation. The bill also restores 100% bonus depreciation through 2026. So if you buy qualifying equipment or business property, you can write off the entire cost in the first year, not over time. Computer, phone system, vehicles labeled. Section 179. Section 179. Expensing is also expanded, with a new cap of $1.5 million, adjusted annually for inflation. Part 6. For corporations. Corporate building. With 21% corporate tax rate, corporations now have permanent certainty. The flat 21% tax rate is locked in indefinitely. This makes long-term planning and capital investment more predictable. Industry-specific incentives. And the bill retains industry-specific tax breaks for manufacturers, especially in sectors like semiconductors and domestic auto production. Clean energy incentives cut. Businesses relying on renewable tax credits may face phase-outs or repeal of past benefits. Budget and social program impact. Now, what's funding all these tax cuts? The bill includes deep reductions in other areas, including cuts to Medicaid and SNAP, repeal of many clean energy incentives, and reduced future federal spending. The Congressional Budget Office projects it could add between $2.4 and $2.8 trillion to the federal deficit by 2034. What to do next? Action steps. Here's what we recommend you do right now. Review your current tax strategy. These changes are already in effect. Track eligible deductions like tips, overtime, vehicle purchases, and business equipment. Consider restructuring your business or retirement plan to maximize new benefits. Book a mid-year review with us so we can implement changes while there's still time. Don't wait until December to do it. That might be too late. Tax law just changed in a big way. Don't leave money on the table. Let Mirror Accounting Services help you plan smarter and keep more of what you earn. Schedule your tax strategy session today. Mirror Accounting Services, your partner for success.